Realtors, here's a tip to help your retired borrowers, right? Your borrowers who do not have steady income anymore, right? Maybe they have low Social Security, maybe they don't have a pension. Either way, they no longer have steady income. Can't get qualified for a mortgage, right? Well, there is a tool available to help them get into a home if they have significant assets. Let's take a quick look. Before we dive into that, my name is Steve Doherty. I'm a loan officer here in Raleigh, North Carolina, and a United States Marine Corps veteran. I will leave my contact information in the video description below. Please give me a call if you would like me to walk you through how this works. So the trick here is something called asset depletion. All asset depletion is treating assets like income. Let's take an example. Imagine that a borrower who's aged 70, that's important, age 70 has $360,000 in the bank, right? We can take that $360,000 on a 30-year mortgage and assign them $1,000 of monthly income, right? If they have twice that in cash savings, we can give them twice the monthly income. So it doesn't matter that they don't have high Social Security, they don't have a pension. We can treat this like they are getting income. This is a great option for retired borrowers without a lot of steady income, but there are a few catches that the borrower needs to be aware of. Okay, number one, the borrower must be putting down at least 20%. If they can only put down 19%, you're not able to use asset depletion, at least with Fannie and Freddie. Number two, the assets that are going to be treated like income cannot be from an account that the borrower is getting distributions from, right? So let's say that they are taking their mandatory 401k monthly distributions. I can't take that same account from where they get $800 a month and turn it in and treat it like income because it's going to be depleting itself. It has to be an account that they're not getting routine or automatic distributions from. It also must be for a primary residence. The final thing to keep in mind is that there are age minimums to be eligible for this program, right? You should be at least 59 and a half, and that's only to tap into some kinds of accounts, right? At the older you get, you hit certain milestones where that may be more permissible to use different kinds of accounts. You should also note that on some jumbo products that permit asset depletion, they don't have the same age minimum. So if you have a buyer who's stuck, an older borrower who isn't qualifying for a mortgage or is afraid to apply because they don't have any income, remind them of this. But make sure you refer them to a loan officer that knows about asset depletion. It's easy to screw these up. I've seen it done before. You want to introduce them to someone who's well-versed in using this